So today we're going to talk about the UK budget that just happened from the government and Jeremy Hunt, and there was some big changes in that budget, especially for us UK investors. Us UK investors got absolutely destroyed, and it was basically the budget of we need to get more tax from you guys and this is how we're going to do it. And one of the things that was in there was UK investors got hit pretty hard, and we'll go through the changes that might affect you and where you might have to be paying more tax, and potentially we'll be looking at some ways that you can try and keep more money in your back pocket from investing when you sell a stock and make profit. When you take on that risk, obviously you deserve the rewards, and we're going to be looking at that as well. Now, a little bit off topic, they did announce a energy windfall tax, so they increased that on the energy company from 25% up to 35%. Eventually they got around to it. That was 5 months later than when this actual CEO of Shell came out and said, look, UK government, you need to start taxing us more. And it only took them 5 months after that to finally bring out a windfall tax for these energy companies that have been making a lot of money from the energy situation that we have at the moment. Also, another little thing that I thought was a little funny coming from this UK budget was EVs. EVs currently don't pay road tax in the UK. That will be changing in 2025. Of course, when you have a big switch to EVs and over 50% of the cars on the roads are going to be EVs by that time frame, you're going to be losing a lot of money from your tax that you make off road tax. So it was only a matter of time before they did bring in road tax for electric vehicles, and that is going to be happening in 2025. No surprise there. But here are the big changes for us UK investors. So dividend tax. When you receive a dividend, if it goes over a certain threshold that you earn every year, you have to pay tax. Lucky for us, we have a dividend tax allowance. So previously that used to actually be 5,000. Currently at the moment, you don't have to pay anything on dividends that you earn in a tax year of over 2,000. Now next year that is going to actually get reduced down to 1,000, and the year after that's actually going to get reduced down to 500. So yeah, that is a massive reduction, especially if you focus on dividend stocks. You are going to be getting taxed a lot earlier of your free allocation on dividends, and obviously the normal rate will be, if you're a basic taxpayer, 8.7%, if you're a higher taxpayer, 33%, and if you're above that, 39%. So unfortunately, if you're a dividend investor, you got hit pretty hard with this budget. Now, this was also one of the big parts that I was really surprised on: capital gains tax. So obviously, let's say you buy a stock, that stock goes up, you sell that stock, you've got to then pay tax on the profit that you made. Now at the moment we do have a capital gains tax allowance, so the first 12,300 you earn, you actually don't have to pay tax on. Unfortunately though, that is going to get reduced to 6,000 next year, and then that's going to get reduced to 3,000 the year after. That's correct, we're going to be moving from 12,300 down to 3,000 in 2 years time, and that will still stay at the rate of 20% tax on the profit that you make when you go over your capital gains tax allowance. So you can see here, dividend investors have been hit pretty hard with their free tax allocation that they get. Capital gains tax as well, that's been having a massive reduction as well, and obviously you're going to be paying capital gains tax a lot early on profit that you make on any investments, which is not great. And we heard some rumours for a while that potentially one way they're going to make some money back is by making more tax from investors. Unfortunately though, this was even more aggressive than what I thought it was going to be. So with that in mind, that dividends are now going to get taxed a lot earlier, your profit's going to get taxed a lot earlier, is there potentially any way that we can avoid or make sure that we keep more money in our pocket when we have sold these stocks for profit, or if you've been investing your hard-earned cash into these dividend stocks and you make sure you keep most of that dividend income? Well, there is a way. Lucky enough, in the UK, we have something called ISAs. Now, I know most of you guys will be using an ISA, and if you are not using an ISA for your investing, you need to start waking up and getting using these ISAs, especially from next year. Now, currently, if you buy any stocks in a stocks and shares ISA, any income that you make from there, and that is from selling stocks or receiving dividends, is tax-free, and your allocation is 20,000 a year. So right now, if you don't use an ISA, you want to be looking at opening up a stocks and shares ISA where you will not get taxed on capital gains or dividends when you have sold things that are in the ISA. Anything else out of that starts nibbling away in your capital gains tax and then goes into them rates now that are a lot lower, and you'll be getting taxed a lot earlier. So make sure you're focusing on opening an ISA and you're investing with a broker that has an ISA option. Now for me personally, I have always maxed my ISA out first, which is what you should be doing right now. Personally for me, as I've said multiple times on the channel, the best stocks and shares ISA right now in the UK is Trading 212. It doesn't cost anything to use that ISA, and as well on that platform, it's very low commission for placing trades. There is other options out there like Hargreaves Lansdowne, but it's a bit more expensive to be investing. There's other options like free trade, but you have to pay monthly to get access to the ISA, and you want to be making sure you avoid the broker options that don't offer it. So on the YouTube scene at the moment, you'll see brokers like Lightyear being pushed as the best UK broker. It is not the best UK broker. You cannot get an ISA through that UK broker. Even though other YouTubers tell you it's the best platform, that is not where you want to be investing right now to have the most tax efficient platform or broker. You need to be focused on ISAs right now, and these changes will not affect you. Obviously, if you're going over the ISA limit and you are over that 20,000 when you're investing, then obviously you need to be aware of these changes because you will be getting taxed a lot earlier. But right now, the big focus is make sure you're using ISAs when you're investing, guys, and you won't feel much impact from this. It's if you're outside of an ISA where you will get a lot more impact. So hopefully this video lets you know of some of the changes, lets you know if you're not using an ISA and you're investing, get using an ISA, because that's where you get a lot more tax benefits from there and where you can keep more money in your back pocket. So hopefully this video helped you save a little bit of money, and if you did know all that, well done, you're on top of everything that you need to know about when you're investing and using ISAs. So hope you enjoyed this little mini video, guys. Smash that like button and I'll catch you in a bit.